Sarah Rubin, Fairway Independent Mortgage Corporation Mid-Atlantic Region's licensed marketing director. If you're new here, welcome. If you've tuned in before, welcome back. Either way, I'm thrilled that you're here. Today, we are going to talk all about conforming loans and conforming loan limits. When buying a home, you have options on the type of mortgage you get, but don't worry, you don't have to make that decision alone. While there are several loan products available to meet your various different scenarios, today I'm going to talk about conforming loans, what they are, their benefits, and why they're important. But before I do, make sure to hit the like and subscribe buttons down below so you never miss a video from us. Each week, we post a new video to help you better understand the home buying process and empower you on the home buying journey. Let's dive into today's video. What is a conforming loan? In its simplest terms, a conforming loan is one that conforms to the guidelines set forth by the agencies, Fannie Mae, Freddie Mac, and Ginnie Mae. These institutions provide stability and affordability to the housing market and have the goal of assisting people in becoming homeowners. These loans are available for 1 to 4 unit homes that meet the criteria set forth by the agencies. Each year, a conforming loan limit is released by the Federal Housing Finance Agency, also referred to as FHFA, for the following year based on the average U.S. home price. These loan limits have steadily increased since 2010. A conforming loan is one that fits within these loan limits and follows all other applicable guidelines. Any loan amount above either the conforming loan limit or the high balance loan limit, where applicable, is considered a jumbo loan. Like I said before, a new conforming loan limit is released each year by FHFA to reflect changes in the market. This limit is reevaluated each year in an effort to maintain home affordability and give home buyers more options in their home search. For 2022, FHFA has increased the conforming loan limit on single unit homes in the contiguous U.S. from $548,250 to $647,200. In high cost areas, the maximum high balance conforming loan limit has been raised from $822,375 to $970,800 for 2022. We'll talk through what this means in terms of home prices a little later. For reference, a high balance loan limit is used in areas designated as high cost. High cost is defined as an area where 115% of the local median home values exceed the baseline conforming loan limit, typically large urban areas. Buying a home in West Virginia is not the same as buying a home in Washington, D.C. FHFA evaluates the median home price across the country and designates these high balance areas to give home buyers the same opportunity in finding a home that works for them. So what are some benefits of a conforming loan? First and foremost, down payment. The biggest myth when it comes to buying a home is that you have to put 20% down. We've busted this myth before, and we will likely bust it again. But for conforming loans, the minimum down payment for first-time home buyers is 3%, and for everyone else, it's 5%. So what does this mean? First-time home buyers that meet the requirements could buy a home in a high-balance area for approximately $1 million with only 3% down. If you're not a first-time home buyer or don't meet the additional requirements, you could buy a $1.021 million home in a high-balance area with only 5% down. If you're not in a high balance area and are a first-time home buyer who meets the requirements, you could buy a home for $667,000 with 3% down. Or if you are not a first-time home buyer or don't meet those additional requirements, you could buy a $681,000 home with only 5% down. Additionally, there are much more relaxed guidelines than jumbo loans. In addition to the down payment component, there are additional, more relaxed guidelines with conforming loans than jumbo loans. The first part of that is that there are more lenient debt-to-income ratios. That means you can qualify with more consumer debt as it relates to your income than you would be able to on a jumbo loan. The second, more relaxed guideline is it pertains to assets and reserves. For conforming loans, there are little to no asset or reserve requirements, which means there is no requirement for a large amount of money needed to be maintained after closing. In comparison, for a jumbo loan, you typically need 12 or more months of reserves just to qualify. Additionally, you can qualify with a FICO score down to 620 for a conforming loan versus typically 680 on jumbo loans to simply qualify and 740 or higher to get the best rate available. While you don't need to completely understand the details of a conforming loan or the conforming loan limits and how they work, it is important to understand that they exist to give you more options for finding a home you can afford and that meets your needs. There are several benefits of using a conforming loan, however, and you should consult with your loan officer about if this product or another product is better for you. For more information about loan products and what you may qualify for, contact one of our loan officers today or check out our mortgage products page for a summary of what we offer on fairwaymidatlantic.com. Thank you for tuning in, and I look forward to talking to you soon.